Good afternoon, everybody. It's Close of Business Tuesday. On behalf of all of us at TPH, we're really excited. We hope you're planning for your Thanksgiving. You'll hear from us one more time this week. I don't want to spoil the surprise, but this is our usual Tuesday gathering, but we do not have a usual topic. Many of you may know this, but most of you may not. This is the 100th anniversary of the San Juan Basin. And when you think of big, dominant, powerful, influential, historical basins, in the history of the U.S., the San Juan is obviously up there. And we've got a good friend, Jerry McHugh, who's going to talk to us about the basin. Jerry's been working in it for 40 years. He is the CEO of San Juan Resources. But there's really nothing Jerry doesn't know about the basin. Jerry, I am not overdoing this introduction. He even does a monthly San Juan IQ webcast, where he talks about the basin. And so this guy, I mean, he loves the San Juan like some people love the Green Bay Packers. He can tell you every player, every title, all the yards gains, Vince Lombardi's favorite plays. Anyway, Jerry, let me just pause and say thank you so much for joining us. We're really excited to talk to you today.
Well, thanks for having me, and look forward to being on your show today.
Well, it's going to be awesome. We got the whole crew here. We've got Mike. We got Matt Portillo, we got Colin Fenton, Craig Webster's jumping in because you can't have a Thanksgiving Day show without a little ESG. And then we've got Matthew Blair. Matthew's based in Denver, recently wrote some new analytics. I won't steal your thunder there, Mr. Blair, but we're excited to have the whole crew. Mike Bradley, a lot of SPR news this morning. What's happening? Talk to us.
Yeah, I think most people were expecting an SPR release was coming today, and I think the release was not as negative as people thought. I think most people were expecting something in the 50 to 75 million barrel range. That's kind of where it was, with 50 of it being the U.S. And so I think the market really is kind of had to take a wait and see attitude, and it's rebounding. So I just want to show a couple things of how things are doing right now today. As you can see from this chart, in the last, since month to date, energy's been down a little bit with crude being down, and it just feels a heck of a lot worse than it really was. And if you look at the last 2 days, these things are all rebounding, crude's rebounding. And so, I think the market's fully anticipated, 70-75% of it was dialed in, and it's now rebounding. The second thing we want to really point out is, in the context of what 50 million barrels looks like, in 91 it was 34 million barrels. 2005, 30 million barrels, Arab Spring, 60 million barrels, and this is 50 million barrels. And it's going to be done over the next couple months. And so, the conclusion we saw in 2011, and we've talked about this for several weeks now, is that, the market tends to dial these things in. And when they actually do it, crude tends to rebound. And that's what we're seeing right now. So I think the conclusion that I put here is that, this is equivalent to you going and getting an extra grand on the ATM in Vegas at 2 a.m. in the morning. We know it feels like the right move, but we all know how it's going to turn out, and that's probably going to be that the SPR is going to come undone. OPEC's going to sit and see how that works out here over the next couple months. And so I think the next item that we're going to be looking at is what happens on December 2nd. That's when OPEC meets. They basically said that, they'll see what happens with SPR moves, and they will dictate on what they do in their, forthcoming meetings. And I think what the market now is thinking is that, OPEC may not push another 400,000 barrels a day into the market in December or January or February, and just see how the S&D plays out. And so, I think, this SPR release is probably falling on deaf ears today. I would imagine the Biden administration is bewildered that price is actually up today. And so, I think this last quote that I put by Thomas Sowell that I always like to put out there, it's, and it really kind of captures what's going on here, is the first lesson of economics is scarcity. There is never enough of anything to satisfy all those who want it. The first lesson of politics is to disregard the first lesson of economics. So I think the market's going to do what it's going to do. You've got to let the market basically let S&D dictate, and they're trying to manipulate. The last thing I'd say is interesting is, on the back of this, Elizabeth Warren today is basically, wanting to call in, gas-related companies, and she says she wants to bring them in for gaming the system to boost profits. And she's calling on Conoco, Equitable, Exxon, Coterra, BP, Antero, Chesapeake, Ascent, Southwestern Range, and Occidental to explain why their prices are so high, why they're exporting, natural gas. So I think what's going to happen is the more they try to dictate and push price and manipulate price, the more it doesn't work. I think the more aggressive it's going to be from a legislative standpoint. And I think, if I were them, I would take, what Ron DeSantis has proposed. The way you get prices down, he's proposed a legislature in his state to reduce the gas tax by more than 25 cents. That's how you help consumers rather than trying to jawbone and manipulate the market lower. So that's where we are. The market's responding well today, and we'll see if there's any follow through. Like I said, the next big date is December 2nd to see what OPEC does.
All right, Mike, that's awesome. Yeah, I think I was sort of watching that this morning going, if you're a citizen, it looks like, hey, some action was taken. It was taken in concert with some other countries. They're not being passive. They're trying to do something. And so maybe there's a moment where you feel good about all that. And then at the end of the day, oil prices are up. What's interesting, Maynard, is one of the first times we released the SPR was in 1991 with the Desert Storm. If we get to 50 million barrels pulled out of storage, we'll be at or below those levels 30 years ago in the SPR. So just think about that. And what people are not understanding is they're going to have to repurchase that oil. And so if they have to repurchase it next year and economy is stronger, it's going to really boost the back end of the curve. And so it's not working right now, and it may even actually be a detriment next year. So just something to think about. Well, your quote was a good one, Mike. It seemed to summed it up pretty well. Matt Portillo, I know a lot's going on in research. I know a lot of new stuff has been coming out. The new stuff just keeps coming. Now that I've stolen your thunder, well, I just kind of teed up your thunder. Why don't I let you tell us all about it?
Yeah, for sure. It's been a fun 2 weeks in research. Last week, the autos team was out at the LA Auto Show. And I think the key takeaway for us is we are going to see a further acceleration of EV launches, not only from the traditional OEMs that are really starting to highlight their EV-specific platforms that are starting to launch over the next couple of years, but also from new startups that are coming to market. The equity valuations today are exceedingly high for zero revenue generative companies, and so it's going to continue to spur competition over the next few years. I think the good thing from a gasoline demand perspective, as we've been saying, is it takes a really long time to replace the auto fleet, typically 12 to 15 years. So even if we got to 100% penetration, which we don't expect for the next 15 to 20 years, it's still going to take a long time for gasoline to really get impacted from these trends we're seeing in the auto space. Second, we did launch on the EOR and CCS space yesterday with our coverage of Denbury, and that's been getting a lot of client attention. Really, the star of the show today is going to be Matthew Blair and his team. They've been making a lot of inroads in the renewable fuel space, and we now have picked up the RNG sector. So I'll turn it over to Matthew Blair to kind of walk through his report, 99 pages, that really goes through a lot of detailed specifics on the macro as well as 4 new companies under coverage from a micro perspective.
Good stuff. Thanks, Matt. I'm happy to go through every single page with you guys. Just kidding.
Well, Matthew, what I'm wondering is you're right there at 99. Only one more page. You could have been at 100. Why did you cut it short?
Yeah, just the way it shook out. 100 would have been nice round number, right? So yeah, we launched on 4 companies in the RNG or renewable natural gas space. These are companies that are basically capturing and processing methane that naturally occurs at landfills, dairy farms, swine farms. And if they can get it into the transportation market, so for example, into a CNG garbage truck, the environmental credits that come with that are pretty substantial and result in pretty high margins. So from the report, three quick takeaways here. One, the potential growth opportunity is pretty huge. Right now this market is about 50 million MMBTU per year, and that could rise about 8x. Even just taking a very small subset of the potential opportunity base. That'd be taking 22% of the best landfill opportunities and just 9% of the best dairy opportunities. The second big theme is that you should expect declining margins in this space. A huge percentage of the margins come from environmental credits like California LCFS credits or federal D3 RINs. California LCFS credits are actually down to 145 a ton. Earlier this year, they were at 200 a ton, and we expect further declines. And then the RIN market is also set for some declines when a final RVO comes out from the administration. And then finally, the third big theme with this space is you should be prepared for quite a bit of volatility. Our 4 stocks have averaged a 1.8 beta this year and an average daily stock standard deviation of 6.6%. So these names can really whip around. But for us, that's just an opportunity to add alpha, as we see dislocations in the space. So with that, I can turn back to you, Maynard.
Yeah, that's awesome. Well, there's a lot in there. Any reactions from the report, Matt, that you'd share that whatever the feedback, any color for us in that department?
Yeah, so a lot of conversations with investors over the past, just few days here. I think in general they agree with our overall rankings of the names in the space, and just appreciate the work we've done to identify the opportunities here. And so it is a space that has really captured a lot of investor attention for being so small. The group is up about 180% on average this year. And
wow.
Yeah. And so it is, even though these are all, 4 small market cap companies, there are names that investors are paying attention to.
Well, it'd be hard to ignore things that are up like that. That's really something. Matt, can I ask you, while we have Matthew here, just a generic question? I think all of us who out here in the world who don't work in research and just wonder how this works. It seems like decades ago, anytime someone initiated coverage on a stock, it was always a buy. Like that's when you initiate it. But if you look back, just thinking off the top of my head, you guys have been initiated on a lot of stuff this year. Sometimes it's buy, sometimes it's hold, sometimes it's sell. Does that type of consideration really matter when you're initiating coverage, or what would you just tell us globally about that issue? It's kind of an interesting one.
Yeah, I think for us, it really a lot of times comes down to the macro work we start out with. I think in Matthew Blair's case, the views on the LCFS market, which are quite differentiated, are going to cause pressure for the dairy digesters on margins, and that ultimately just plays out in terms of how we force rank some of the stocks. And so starting with the macro and going to the micro has been quite helpful. Kind of similarly in the auto space with the sell on Tesla, as an example, our views and the work we've done on the broader sector around competition and how we think about autonomy has been a big driver there. So, from a research perspective, as the market's gotten a lot more competitive, I think clients want, quite frankly, very direct and frank views on stocks. And historically, that may not have been the case. And so as the competitive landscape has gotten more aggressive, I think it just behooves everyone to be honest and open about how you're thinking about equities all the time, and we try to do our best job around doing that. So not sure if that answers your question directly or not.
No, it's think about it. Well, I guess so much of this is just you're gaining knowledge, you're building, capacity and understanding. And so it's not really about, what's a buy as much as it's about knowledge at some level. But anyway, I just thought I would ask it for all those non-research people out there who've ever wondered that question. Colin Fenton, what do you got for us today?
Well, I'm going to pick up a little bit on what we were just talking about with the guys. I've got some charts on gasoline and what's really driving things. Maybe this is for the Thanksgiving dinner conversation. But take a look at this first chart. The California Energy Commission actually usefully publishes data where they decompose the components of the average retail gasoline price in California. So what's interesting is, as of November 15th, according to the Energy Commission, the average price was $4.53. That was 2 days before President Biden's famous letter to the FTC chair, insinuating that there was some manipulation in price. And yet, when you look at the actual internals of what's moving around, it basically all makes sense. It takes money to move gasoline into Los Angeles. So there is a distribution cost, a marketing cost. It's been going up. You will not be surprised to hear. There's a cost of crude oil. We all know that it's been going up. The refinery costs as well. And then, of course, taxes play a big role. You heard Mike talk about Florida and what the governor there might do. In California, the state excise tax is 51 cents. State and local sales taxes are 10 cents on top of that. Then you got the 18 cents federal excise tax and so on. And so when we look at the various components over time, this is what the crude oil cost as a percentage of the retail gasoline price in California has been for the past 23 years. That's 1,194 weekly observations. Notice that today at about 47%, that's kind of average. In fact, it's right on the average. It's been as high as 70% in the past. There's been an allegation that refineries are somehow goosing the finished price of gasoline. Here you can see that it's in the low 20% range for refinery costs and profits relative to the final price. Doesn't look, particularly egregious, like it's jumping out in any kind of way. What's the one thing that's increasing? Taxes. Taxes are now 81 cents per gallon for each and every gallon in California. As recently as 2016, that number was 54. And so you don't hear the politicians really talking a lot about this increase. They would have you believe that these ratios are much higher. And then when you look more closely at the letter, I think this is important to be intellectually honest about, sort of picking up on the idea of research. What's the purpose of research? Look, we're all grown-ups here. And when you see a letter from the president of the United States about gasoline, I think we all know that Joe Biden did not write this letter. Somebody wrote this letter for him. The person who wrote the letter understands that there's this thing called unfinished gasoline that's different than what is sold at the pump. When somebody is very carefully writing the words and wordsmithing it to focus on unfinished gasoline is down, but prices at the pump are up, suggesting that there's an unexplained large gap, I would say that they know that there are other ingredients. They even use the phrase here, the main ingredient is the unfinished gasoline. You cannot persuade me that they're unaware that, what the other ingredients are. And of course, what's really happening here is the letter would have you believe that there's something nefarious about unfinished gasoline prices falling and finished gasoline prices going sideways. That is true. The letter makes a true statement when it says that. Of course, we all know that there are different specifications for gasoline in the summer and the winter. And so the mere fact that we're now in November instead of August is a good part of the reason of why this price for unfinished gasoline is falling. But really, the main bit that's being left out of the president's letter is ethanol. Finished gasoline includes the cost of the ethanol that is required by law to be blended into it. So it's super important to know when you're looking at the finished gasoline price at $3.40, the unfinished gasoline price at $2.30, that the ethanol price is at $3.50. There is no mystery. Ethanol is the missing component. Ethanol is made from corn, so there's no mystery here too. Corn prices have been higher. Corn prices are affected by supply and demand. You harvest the corn, and you get a cost push effect into the ethanol price. And that's exactly what we observe. And then Matthew Blair and team have done a fantastic job anticipating that RINs prices would come down from this peak, which they have. But if you're a consumer, they're still elevated from where they were before about 2 years ago. And that's 93 cents per gallon. Now, keep in mind that you're blending 10% ethanol into gasoline, so do the math on what that all turns out to be. And so finally, when you then have the SPR be, the second punch in a week of trying to get the gasoline price down through oil prices, which are not even really what's moving gasoline prices on the margin today, it's important to know that oil production from OPEC Plus has been increasing month on month every month since April. It was 131,000 barrels per day relative to March. And you can see all of the dark blue bars here for what OPEC Plus has done relative to the United States. In November, we've gotten back to 99.1 million barrels per day of global production. We were on track to get to 99.6, largely thanks to OPEC cumulatively adding 3.5 million barrels per day, which is 10 times what the United States has done, and admittedly had more spare capacity to accomplish that feat. But it really raises the question now whether Biden's attempt to manipulate oil prices for the first time, changing what was supposed to be an emergency tool into a price manipulation tool under the power of a single person, will increase the incentives for OPEC to halt some or all of the next 2 million barrels per day of expected supply that was going to come back by April 2022. And so the final point is markets see all this. Markets are not fooled. Markets would prefer that politicians are more honest, but they don't get very moralistic about it. They just price in what it means. And so the price of oil went up today because the market can see that in a flow versus stock contest, the flow being the flow from the field, the stock being an attempt by a politician to draw from a finite resource, flow will always win. Flow will always be able to outlive, outsurvive the stock. And so it's particularly alarming if you're the politician that in a process that was already seeing falling prices on RINs, corn, ethanol, and all the rest of it, all this has done is created disincentives for CapEx by public and private producers in North America, incentives to withhold supply by sovereigns, incentives for China and India to be the purchasers of the SPR barrels. And you get this price movement here at the front end of the curve and further out. And I would say, lastly, when you see the Treasury yield curve in the past week also adding about 10 basis points above where it was a week ago, that too is just telling you that markets are saying, oh, you've got to be kidding me. We were on a path to about to have disinflation, but now we have to build in the supply and demand balance, possibly giving us some more inflationary impulses that were completely skippable, but now we have to deal with them.
That was fantastic, Colin. Mike, I was just, as Colin was going through that, I was remembering something you said, which is incredible. If OPEC doesn't do their 400,000 barrel a day increase as a result of this SPR thing, that's just becoming a Hatfield's and McCoy's kind of terrible fight between, I guess, the U.S. as the leader on one side and the OPEC plus. That will be a disaster. But maybe that plays into the administration's hands because they want to blame it on OPEC.
Well, what made me think about, everyone's been making these analogies back to the 70s, right? And what did we do back in the 70s? In the 70s, we've attempted to, penalize OPEC. And what did OPEC do? They cut us off from the market, and look what happened to inflation. Look what happened to lines for gasoline. I'm not saying we're going to get there, but you know what? OPEC has got the best poker hand in the room right now. And so the U.S. should not try to muscle these guys. They're not going to win. Just like Colin said, flow always wins.
Well, and to that point, Mike, let's not forget the entire reason the SPR exists is because of what you just said, because there already was a halt in the flow of OPEC barrels. So to play this game, to try to manipulate a price, which is a symptom of supply and demand, is just the worst possible strategy. And yet here we are.
All right, guys, there was a lot of meat in there, a lot to chew on. Thank you. Speaking of a lot of meat to chew on, Jerry McHugh, welcome again. Thank you for joining us. We're so glad to have you. As I mentioned in the lead-in, it's the 100-year anniversary of the San Juan Basin. I think in the pregame, I was, sharing with Jerry, everybody who's kind enough to watch us each week has a little bit of knowledge of the San Juan Basin for sure. But I would dare say it's probably been a while since a lot of us have thought about it, how its scope, how it's doing, what's the latest. So, Jerry, let me welcome you and ask you to give us just a quick lead in on, what's happening in the basin. Your company is active there, but you're like the mayor of the basin. You know what's going on broadly. So let us know what's happening from out there. And welcome.
Well, thank you. I've been, my entire career has been in the San Juan, and actually I live in Denver. So I have the model of living in Denver and having the assets in New Mexico. They're all of them are in New Mexico, except for little overrides. But yeah, worked, this is my third job in the San Juan Basin, working for myself. I'd worked for Dugan Production for a couple, 4 or 5 years, then my dad's company for about 7, then started San Juan Resources on my own in 90. So been through a lot of it. I thought I'd show first where the San Juan is. I'm not sure if people know, but it's in the Four Corners area. Let's say 20% of it is in Colorado, and the rest of it's all in New Mexico. So It's a great place to work, Cretaceous Basin, top to bottom. So we've produced in 100 years 55 TCF of gas and 440 million barrels of oil. So primarily a gas province, but this is one of my favorite slides, which I got from Hillcorp. You wanted to know what the daily production was today. This slide was done in 19 of the energy conference we had down there in Farmington. And we're up to it shows here about 2.5 BCF a day. We just did some numbers this morning, 2.8 BCF, that's between Colorado and New Mexico, and probably 30,000 barrels per day. This is mainly with some of the new PE-backed companies that are down there. It's got so much potential. You'll see in this next slide, this is cumulative production by formation. And when the Mesa Verde was discovered in 1927, when we had our first well, for several decades, it was known as the largest gas field in the world. And it has been the largest producing formation in the San Juan of all these Cretaceous zones. But you can see what happened when unconventional started. And this is a real kicker of the San Juan, why it's just such a great place to operate. It just keeps re-giving back to the people who stay there. This is production since 1980, unconventional. The first unconventional pool in the Fruitland formation was done by R&D with Amoco in their Cedar Hill area. So tons of work up there. You probably wanted to know about some of the players out there. This is one of my favorite maps. There are no majors in the San Juan Basin. You asked about what it's like with Hillcorp there. In the pink is Hillcorp. They took out all of the ConocoPhillips petroleum assets right here, mostly in New Mexico, mostly dry gas. This is a really great map because it shows the dry window and the wet gas and the oil window here in San Juan. And then another major got out right before COVID kicked in. Amoco BP, they're a legacy company. They go back to the 30s. Sold out to a European renewable company called ICAP, owned by a guy out of Hamburg and his associates. They're essentially a facilities company. So they bought $660 million a day. Then we have other PE backed. I don't really know what to call ICAP. They're funded by Europeans. They say they're a long-term player, but essentially everyone down here is a private. Then you have in the green, you have DJR Energy. They took over the Encana assets in the south central part of the basin here. And then Enduring took over the WP assets here in the oil window as well. Lagos Resources 2, that they're called now, are both in the gas and the oil window. And they had some significant 2 wells up here, the largest wells in the basin. A new player to the basin, public, is EOG. They just bought 4 townships of leases, not just, but it took them 5 to 8 years to put all that together in this part of the San Juan down here. Then these are where my company's assets are. We have 25,000 acres in the oil window and then 6,000 up here in the gas window. So very, very active basin, very, long-term. You go back to that slide, this one here, I really think the coal bed Fruitland has probably an additional 25 TCF left. And if you go to the Mancos, some of the estimates are for 100 TCF of Mancos gas reserves and about 1 to 2 billion barrels of oil in oil reserves. So that's a little quick quick show of that.
No, that's a great lead in. And well, one thing you heard about it, Jerry, and this is just kind of the world we've been living in for a while here, is the overlay of government policy, government involvement, government, at all levels. What's going on in the basin? Do you mind giving us the federal, state, kind of breakdown and tell us what it's like on the ground, what you're feeling from state regulators as well as from the feds?
Well, we'll start at the top. 85% of the minerals in the San Juan are federal minerals, and the rest are going to be, and I'm talking the major part of the basin. You get on the edges, and that new operators map was good because it showed the reservations. But we are working through, and we're really getting good at permitting wells with the Farmington field office. They were really slowed down by COVID. They're up to probably 35-40% of the people in and out of the office. So it's been a challenge working with them, and especially with the administration change. They're running things through their traps. It's taken us a while to get them out of the field to see things with a variety of things like rainfall and muddy roads and things like that. So we've had some difficulty, but I think we're getting really good at it. We work with a contractor out of Farmington, and they're really helping us get through it.
Can I just ask you a question, Jerry? Because I don't think I don't know this. Others probably do, but when the administration changes, that doesn't really mean that the personnel of the Farmington office, it changes. It just means, right, they got to check with a different supervisor, some new guidance, et cetera. But the people don't change like that.
And arguably there's some really good federal hands there, and then some ones that are really allied with more of the green movement. So you have that to deal with. But they have their they have to follow regulations on how to do things, and there's timetables for doing things. So some of those timetables have been slowed down a little bit. I mean, EOG, for instance, they had permitted 60 plus wells in that area that I showed you on the map there. So they did a lot of work pre the current situation we are now. We've had some good experience with the unit group. We're putting together 2 units in our oil area. So the Wyoming, New Mexico group has really been helpful, and we have a designated unit. Another one's going to be designated here in a week or so. So they've been very helpful. Of course, they're kind of up the food chain a lot. On the state level, I think that the state has been pushing through and implementing new methane rules to work on tightening up the wells, no release of methane, trying to be an example to the rest of the producing states. There's a convergence of really good prices right now, which is, there's not a lot of pushback because some of these marginal wells are going to be tough to work on as far as getting them done. As far as do they make any money? But state does know where it gets its revenue from. 38 to 40% comes from oil and gas in New Mexico between the Permian and the San Juan. So we're all benefiting from the high commodity pricing. On the methane rules, they implemented them. We are really working well with our production and contractors out of Farmington on a reporting system. So that is a big deal, reporting how the methane comes off location. So, overall, we're a gas basin. I mean, if you look at, we produce so much in our basin on gas. And if you look at, there's a lot of places for the gas to go. I mean, here's a map of, we don't flare. We don't know what it's like to flare, only because there's so many places where we produce wells into the pipeline rather than flare them. So that's totally against, not against it, and not with what we do. So
Jerry, on that question, where does the gas most often go, and what kind of prices are you getting for San Juan gas right now?
Most of the gas flows through the gathering systems here to the Blanco hub. This is our San Juan index priced at Blanco hub. Currently, we're at 490 today. And this month, our index was, whole month index, we're at 560 or so, 560. But the majority of the gas on this map goes through Blanco hubs to California. And if you looked at that previous map I had, we're the closest, largest gas basin to California. We're arguably, when Permian kicks in, that chokes us up and pushes our basis high. So our basis has come down. Traditionally, it's been 20 to 30 cents below NYMEX. So we're about there now.
Well, and let me ask you while we're on the topic, you mentioned these new methane regulations, and Craig Webster, jump in here. But when the state is pushing some new things, are they pushing some new technologies, some new reporting? What are the specifics on what they're pushing? And Craig, by all means, jump in here if as you want to add something.
They're pushing new technologies, especially with the FLIR cameras, which you put on location and see where the leaks are coming. So they're very, some of the cameras from a year or two ago are already outdated, and they're very expensive cameras. Our contractor's getting some cameras that they can work on all gas well locations. The reporting is real time. My comptroller, right-hand person here, Lori, who's in the room here, piping in, working on this reporting system that takes it right from the wellhead, and we can just gather this information really well. So that's been a real plus. And I think we're really getting good at some of this small stuff. So it's just for a small producer like San Juan Resources.
Jerry, when you talk about you talk about sort of the friction and some of the marginal wells from an economic perspective, but when this kind of new regulation is formulated, what's the industry response? It's a basin that's got a lot of private and relatively small producers. Obviously some of this becomes a burden. Is there a way to gauge sort of how much of the basin is at risk if at a more normalized price? Is it a very small percentage, or is it actually sort of a reasonably substantial number of wells that are at risk?
I think we have 25,000 wells between New Mexico and Colorado, and I'll speak for the New Mexico side because this is where the regulations are coming. I think we're obviously in a good price environment where it's good to be at this place right now. It's a way to be seen for me. I mean, we have our wells are holding valuable leases, deep wells. We try to convey that to the regulators that these marginal wells would the Permian be the Permian if there weren't those wells that were holding those leases. So we try to convey to them. We thought was a gentleman's agreement with the state that the marginal wells would be exempt, but at the end of the day, they were not. So, and the gain is going to be this much. If I can share on the screen, the gain is going to be this much for what you get for cutting it down, but the cost is going to be humongous. So, the cost gain, you cut out marginal wells in the state of New Mexico. In other states are going to implement these kinds of things. You're cutting out some good supplies. So, and then maybe those wells just aren't supposed to last. You have some wells that are very, very small, but most of the gas is quite dry. Fruitland, the Mancos gas, the new wells will definitely be able to withstand these kinds of regulations. So.
Jerry, just a question on capital allocation. We've seen, particularly in the Permian, on the unconventional side, as commodity prices have rallied, the privates have gotten pretty aggressive getting back to the drill bit. How are you philosophically thinking about capital allocation as it relates to, returns from a well perspective, and then more broadly, drill bit capital and kind of growth versus maintenance CapEx, and just more broadly, how are you approaching the business model in the basin, and how do you think other privates are as well?
Well, we've got 25,000 acres in the Mancos oil window. We've got about a 60% rate of return for that. So we're looking for investors, family businesses, family offices to come invest with us, and we have some good leads going already. We really get a lot of encouragement from some of the PE-backed companies here in Denver. There's some we talk with, and some of their oil in place numbers really match up with what we have in our 25,000 acre area. And so really betting, at least on the Mancos oil, that prices are going to stay up. And I've been very, very thankful for commodity uptick, because that's helped with our G&A to move these projects along with our current production. So that's really been helpful to me. And we take that and the board of directors you're looking at. If my wife was here and our other employees, that's our board, and we're taking that out of the company and putting it back into putting these units together and getting these wells drilled. So, I mean, I think I'm optimistic about it. That's good. And then the Mancos gas is even more incredible. Some of the returns on that. So.
Maybe I could ask you this, Jerry. What's going on with rig count in the basin, and what would you tell us about completion techniques and what's been changing, if anything, there lately? Okay,
so rig counts are at 3 rigs. That's not a lot, and I think the outlook for 2022 would be up to 5 to 7. That's pending permits and pending things. Keep in mind, EOG's a bit of a wild card there. And I base the 5 to 7 on a couple of PE companies would probably get up to 2 rigs. So there'd be four or 6 of those rigs. And then small guys like me would have a rig here and there to get our initial drilling done. I'm thinking of also another companies up in Colorado. They're in the midst of permitting. They are PE backed, but they're running through the Colorado permitting process, which I'm glad we're not a part of. It's really from what I've heard.
So Jerry,
now Colorado.
Well, so Jerry, yeah, Matt Portillo's in our Denver office, so he may come out swinging there, Jerry. But a typical well, like in a Fruitland coal well, do you mind just give us a sense of the curve of the well? Because it's been a while since we all looked at these, but our impression is they come on not as hard, but they last a lot longer. But you tell us.
Well, let me talk about the Fruitland first. Up in La Plata County, Catamount is drilling a number of horizontal Fruitland wells that are 2-mile laterals. Red Willow is also there, the Southern Ute operating company. They don't frack these wells. These are very responsible gas-produced wells. They come on at 7 or 8 million a day, and they really come on strong.
Okay.
They put slotted liners in them. But what I'd like to point out in the New Mexico part of the basin and in Colorado, the Mancos gas wells are quite incredible. This is the gas window. Okay, this is the Colorado New Mexico line. You can see La Plata, Archuleta County, where now this is where the Fruitland wells are being drilled too. These are 2-mile laterals, and BP drilled these Nebu wells up here in this area here. Down here in Rosa, that was a WPX unit that's now owned by Lagos. They just drilled 2 wells. They drilled four wells this past year, 2 Mancos oil, 2 Mancos gas. And they drilled the 7th and 8th best Mancos wells. Their IP30 was 18.3 million feet of gas a day. So you can see how these wells on this curve have done. Let me fast forward here to the BP wells in the gas. This is a type curve for 4 2-mile laterals, which BP drilled in the Nebu unit before they sold it to ICAP. So they drill these wells, they get, but these are 20 BCF wells. This is the composite between the 4. So I think that's a pretty good curve right there.
Yeah, so I had that wrong. They come on, they're really big wells, and then they don't decline too fast.
Right. Yeah, you're going to get that from the Fruitland, Maynard. You'll get fact. Let me show you here. When Amoco did their initial work in the Cedar Hill area, you can see the Fruitland well coming on here slowly here, and you can see the water coming on down. Well, this well came on about 100 MCF a day, and over the course of a couple of years got up to about 1 million a day. the water came on about 200 barrels a day and came down to zero. So that was the Con well.
Okay.
That's the famous Con well. So that's how that is. Get down to the Mancos here, though, and these wells are more like that. So that's, Then,
so the Fruitland wells are coal bed methane, and the Mancos wells are not, and that's why that profile is so different.
Right. The Mancos is a formation below the Mesa Verde and above the Dakota, and it's 1,800 feet thick, depending on what parts of the basin. There's several members of it. So you can drill a horizontal in this Mancos B zone here, is shown by the BP well, and then you come back and you can go down to the C zone and drill the same thing. So much of what the work is done between BP, Lagos, and in this gas window area. There's been maybe 16 wells drilled, and they just keep getting better and better. The oil's a little more nuanced. Some of the Mancos oil wells, and I can show you a curve on that. This is an operator in the south central part of the basin. This is an EUR of about 980,000, maybe 1 million barrels oil equivalent EUR. So this is Nageezi well with the gas coming on pretty strong, and there is a little bit of water production, but like these, they're similar, a little bit quicker decline than the gas, but then you'll get a lot of liquids out of these too. The BTU content is going to probably be in the 12 to 1,300 range.
Interesting. So, Jerry, one of the things you had mentioned to us is there's some fun things you guys are thinking about in the basin involving potential LNG access and also some hydrogen plans. Do you want to give us some of that?
Sure. There's a group called the Western States Tribal Nations. It's an advocacy group that Governor Hickenlooper, when he was governor of Colorado, and the Utah governor, I can't recall his name, they put that together to help promote Rocky Mountain gas between the Western states and the tribal nations. So they've been behind, actually Colorado withdrew from that when they got a new governor, Democratic governor. But the counties of Western Colorado joined the Weston, and all the members of this are the Southern Ute tribe, Indian tribes in Utah. I think the Jicarilla Apache tribe is joining. The state of New Mexico is in full tilt. A good colleague of mine, Jason Sandell, is chairman of this group. So this is one of their projects where they take gas to the Sempra is building an Energia Costa Azul plant, or ECA plant they call it, and for gas to be exported from the West Coast to Asia. So that is our first chance in North America to have a plant to take gas off from the West to this area here. And I might add, I got on these guys when I saw this slide a couple weeks ago. That should be 100 TCF, not 11. So anyways, this is the plan for the work that Western states and tribal nations are working on, in addition to Sempra infrastructure. I had breakfast with one of the Sempra directors and some of his colleagues last week, and they're up here in Denver for COGA. And I could have had breakfast the whole day with them. It's so interesting talking about some of the things they were talking about, especially some of the hydrogen too.
What is the roughly? What's your understanding about how soon that facility could be up and running?
2024, with about 2 BCF a day takeaway.
Wow.
The real key is to get San Juan gas. It's this little part here from, I think it's Ehrenberg to the coast, Granted, there are lines in Texas which run parallel to in Mexico, which run parallel to the U.S. border, taking gas, various ways here. But they're working on this piece here, trying to get that done. Do that, and I know, and New Mexico is working on a bonding authority where we can move some of our gas and increase the line capacity from New Mexico to Mexico. So.
Do you have a sense of it, Jerry? Like if that were to happen and you started pulling that kind of volume over there, what could that do to gas prices across the West?
Well, it would be another market outlet for our volumes. I mean, like I said, we produce 2.8 BCF a day. We had the capacity on one of those first slides I showed you of 4.5 when the Fruitland was really kicking in at the end of the 90s and 2000. So it would enhance things. I think it would just be a steady market, at least for New Mexico and for the West. I think all good boats could be raised by it. But when I asked Sempra about that, they said, okay, so how much demand is this going to really satisfy for Asia? This sort of a thing. Oh, it's like minuscule. I mean, the Asian demand is humongous. I mean, I've talked to a guy, they're looking, so like there are these little air conditioner units that people in Vietnam and Laos and these South Asian countries have in their huts, and they're cooling their huts down. People are getting modernized in the world with these small little units, and they need gas, they need electricity to run these things. So there's the market is unlimited if you can get access over there.
You mentioned this whole thing is a discussion of you mentioned the tribes, and there are a lot of Indian lands in the West with production. Anything you would tell us about what's going on with the Indian nations in and around the San Juan? Anything to report there? Well,
we've got the new operators map, which shows new operators, oil and gas, windows, everything, and then it shows the tribes. The Navajos here are in kind of this Amarillo color. There's a little bit of drilling here on this side here. They're working on a hydrogen project there. They had to close the Navajo power plant, which was coal-based. They're thinking of converting that to natural gas, making it more of a hydrogen project there. Of course, you get out here into Arizona and Utah. Four Corners is going to be right there. You get into Arizona and Utah, and there's more helium that's done on that, the Navajos and the natural gas. And check on, and I know a little bit about it to be dangerous. The Hickory Apaches just put up a solar project here in the north side of the basin. They have an oil and gas company that we talk with here in town that is working on some development things. So they're a very small tribe, and everyone's trying to be like the Southern Utes. The Southern Utes out of Ignacio have a sovereign fund. They're like an international oil company. They do stuff in the Gulf of Mexico. They do stuff overseas. Have a little bit of things here in the San Juan Basin, but mainly have leveraged what they've done for their tribe, and they're very focused on that. So that would be the three I know the most about, and I've worked on all three of those in some capacity or other in my 40 years, and it's always interesting to the Indian tribe.
Well, it's a hard question to answer, but I think generally we've got federal, we've got state. It's just kind of another jurisdiction to wonder about, which is not one single jurisdiction; it's multiple. But how are the Indian nations? Are they getting tougher on operations, or are they seeing it as an opportunity to not do some of these things that the other places are doing? I know that's a huge question and probably can't be answered, but Colin, that could be a whole show for us someday. Jerry, just as we kind of move towards wrapping up, San Juan IQ, do you mind telling our viewers, what you're doing there? It seems like a weekly town hall where you're
I don't know. That's a good question. No, it's I started in April of 2020, maybe May. we've had them every month. So we didn't have them last August. Every month we've had a show on there, just really things I'm interested in, topics and issues, curiosities I have in the San Juan Basin. I usually have putting a lot more than anybody out there. Last month we had Brian Hassel with SEMA Energy. They market 4 BCF across Western U.S. and North America. He talked about what the winter's going to look like and going into 2022 for natural gas. We get about 80 to so signups usually a week. We kind of the same crew. It's hard to enlarge your base on that, but we had Tom Petrie on, and our database got pretty large when he got on. So that was a good show. He was on in April of 21. We talk about transportation issues, market our project. It's just a way for me to meet new people too, and put myself out there. And it's been fun to do, but it's like, I'm sure like you experience every week, it's rather nerve-wracking to be the MC of these kind of things.
Oh, heck, this is fun. It's easy. I get to meet fun and interesting people like yourself.
Yeah, you know what it's like. You get to meet people that you wouldn't normally meet otherwise. It wouldn't for COVID or something like this. So we'll do it as long as it can work. So, but maybe as we wrap up, see if anybody else has a question. But I don't know, 1 minute on what you're doing on hydrogen. I think that would be, most of us would not have guessed you guys were doing something with a hydrogen hub. Yeah, here this is really from Weston that's doing this. They talk about the Libertad project, blue hydrogen utility grade near Kirtland, New Mexico. That's up by Farmington. H2S storage and CCS, scalable 25 megawatts. They've got a Coyote plant, 8 Rivers, 280 megawatts clean power, 24/7. Then the big Navajo Biotech project. So that's where they're taking the Navajo Nation flared gas and using it for H2 and putting zero emissions, putting it back in the ground. So just some of those are just rather interesting things. I don't, I just know what I've heard about them from other, from Weston mainly. And they're based in Denver.
All right. Well, look, this was fantastic, Jerry. It's been a while since we looked at the San Juan Basin. We all needed to do that. Things are going to change, and we should, if we've learned anything over these last, during COVID times, is do not take anything for granted. Something could be changing, and so you better pay attention. So it was fantastic to have you. And now our audience has met the mayor of the San Juan Basin. That's what we're going to call you, Jerry.
Okay. Well, I'll take that unofficially. It may require a lot of other things I have to do, but at least for now, I appreciate that. Thank you.
Well, we might have to send you a little something for your desk.
Okay.
Well, Jerry, thank you so much. Thanks to all of you. We'll see you one more time this week, but have a great one.